Hey, what's up guys? John here. Inflation rose a whopping 8.6% in May. It's the highest in 41 years, December of 1981, right? So this is what I think is ultimately going to happen. I think the Fed is kind of pushed in a corner here. They have two options. One, they increase interest rates, which now I think they're going to increase rates even more simply to combat inflation. Because they said they're not going to let inflation get out of control. This is definitely not good news to the Fed. They're going to be increasing interest rates. What is that going to do? Well, it's going to increase the cost for borrowers to borrow money. And most people in America, they don't have cash. They need to borrow the money. If they're going to spend more to borrow money, it's going to be more of a challenge. If business owners are going to spend more to borrow money to support their business, to buy products, materials, to have additional resources so that they can expand and grow, then what's ultimately going to happen? These businesses are going to be forced to contract. So we're going to be stepping into an environment where businesses are going to be contracting, consumer spending is going to be contracting, everything is going to be contracting, and all the while gas prices are going to continue to rise, meaning that consumers are going to be spending less, but yet everything is going to cost more, because if it costs more for trucking companies to fill their trucks to get everything to the stores that we buy items from, then obviously the cost is going to be pushed onto us, right? I think that what we're going to be seeing here is increased cost in a big way, and I think that if they don't do this, let's say, for example, they keep interest rates where they are right now, I don't think that's going to happen because inflation is just going to continue to run. So I think that they're going to do everything that they can possibly do to damper consumer confidence, whether it be through the stock market, like what we're seeing now, stocks getting crushed. And I think that this is only just the beginning. I'm not selling fear or anything like that. This just it's the reality. This is the world that we live in. They have no other option. And I think that we are going to be stepping into a big opportunity to invest and to allocate capital when things hit the fan, when they really get afraid and scared. That's normally when the best time to invest is. Most fortunes are made in times of uncertainty. So I think that those times are coming right in front of us, right? So inflation accelerated further in May, the highest since December 1981, right? Energy prices broadly rose 3.9% from a month ago, bringing the annual gain to 34.6%. Within the category, fuel posted a 16.9% gain. Imagine, this is crazy. 16.9% monthly gain, pushing the 12-month surge to 106.7%. Shelter cost, which account for 1/3, weighting on the CPI, rose 0.6% for the month, the fastest 1-month gain since March 2004. The 5.5% 12-month gain is the most since February 1991. Finally, food costs climbed 1.2% in May, bringing the 1 year to 10.1%. This is what is it's so clear and so obvious, at least to me, why I think that we're going to start to see a lot of NFT projects start to go under, a lot of crypto projects are going to start to really go belly up. A lot of projects that offer, hype and speculation and interest, but very little utility. I think we're going to start to see a lot of capital leave those, alternatives. And the reason being is people just can't afford it. I mean, if you're going to fill up your Jeep and you're spending $120 to fill up the tank, or you're filling up your Honda Civic and you're spending $85, or you're spending, $400 or $500 a month just to fill up your gas tank on a basic, 4-cylinder vehicle. People don't have the discretionary income to go drop $500 a month or $300 a month or whatever investment is on Dogecoin. They're going to be taking the risk off the table, and they're going to change their consumer habits. And, they've already kind of been talking about this, saying that consumers are changing eating, shopping habits as inflation pushes up prices. They said initially concerns was the highest gas prices, followed by groceries, other forms of discretionary spending, right? The number one concern for Americans is the last couple of weeks is groceries, right? Both food and energy costs have spiked, and they're saying that people are going to start trying different foods, such as plant-based foods and dairy options, because they can't afford traditional foods. So others are shifting their shopping habits to take fewer trips or foregoing their favorite brand. So they're taking fewer trips, they're shopping generic brands, right? Entertaining at home instead of going out and buying in bulk. All this is going to continue to grow. There's no doubt about it. And it's always comical to me. How did they get it wrong, right? And Janet Yellen, she doesn't know what happened. She said that she admitted that she made a mistake. To me, everything kind of seemed obvious in the direction that we were headed. But you know, I don't see how this was a mistake. We printed so much money, we kept interest rates at zero. What do we think was going to happen, right? And we put out all these different types of protections in place and put out so much money, and we did so many things to stimulate the economy. It's not sustainable, right? Obviously. And now we're trying to pump the brakes on a heavy truck headed towards the end of a cliff, right? We're in a very bad position as an economy. And that's why I think that we are going to be stepping into a recession in the beginning. I think it could actually lead to a depression. But I think that, again, this is not a bad thing. This is not, of course it's not a great thing. A lot of people are going to be hurt financially. But it's not a bad thing because during these times, there's going to be so much opportunity that's going to open up in different businesses, in different niches. So many bad companies that are heavily leveraged on debt are going to be, going under. It's going to be the companies that are really strong, that do very, very well, that really take care of the consumer, that supply massive value, that are going to expand during this time when everyone else is going to be contracting. So this is a great time to start a business. It's a great time to come up with a game plan, great time to build credit. This is a good time for a lot of things. I just think that it's a bad time to invest in meaningless crypto projects, meaningless NFT projects, speculating on certain stocks that most likely won't do very well over the next 3 to 5 years. Maybe buying that huge real estate deal right now might not be the moment. I think we're going to see some big opportunities coming. Those escalating prices meant workers took another pay cut during the month. Real wages, when accounting for inflation, fell 0.6% in April, even though the average hourly earnings rose 0.3% according to a separate BLS release on a 12-month basis. Remember, they would always say that people aren't being paid enough, they're not being paid enough, employers need to take care of their employees. Well, how can employers take care of their employees at this rate? Because even if they're getting increases on their wages, they would have to get 15-20% increases for them to just maintain lifestyle with the direction that this country is going right now. Employers can't do that. Employers simply are not going to be able to come out of pocket on their entire staff paying 15 or 20% more if they're not getting 15 or 20% more from their employee, right? If they're not, they're getting the same amount of value from their employee, maybe less because society is kind of changing. So they're getting less value, but they're supposed to, pay more. This is not going to be good, right? Markets reacted negatively to the report, with stock futures indicating a sharply lower open on Wall Street and government bond yields. It's hard to look at May's inflation data and not be disappointed, said Morning Consult chief economist. We're just not yet seeing any signs that we're in the clear. We're not anywhere near out of this. We're just starting. If we look at where we are as a country, as an economy, since 2008, right? So 13, 14 years, we've been on this parabolic bull run. We've had, a quarter and a half of negative growth. The economy's pulling back. This is not a recession, right? We're just kind of leaving a euphoric place, but we're not stepping into any type of real recession. We're not here yet. So when he's talking about being out of the woods, we haven't even entered the woods. So and that's I think that's interesting because a lot of people a lot of journalists, a lot of economists will come on television and say, oh yeah, we're coming soon, or this is going to happen. But if you really look at the core fundamentals, the entire country is basically broke, right? Everybody's basically broke. Cost of living has increased 15-20% across the board. Wages are falling and gas prices are up 100%, right? How can we step into a situation in which we don't step into a recession? That's the big question. How does that actually happen? Some of the biggest increase came in airfare, up 12.6% for the month, used cars up 1.8%, dairy products 2.9%. Vehicle costs had been considered a bellwether of inflation surge and has been falling in the past 3 months, so increasing its potential ominous sign as used vehicles prices are now up 16.1% over the past year. New vehicle prices rose 1% in May. That's definitely not sustainable. We're going to see, I believe, one of the biggest bubbles in America right now. It might not be real estate if used cars are not it. I think used cars would probably be the biggest bubble. Used cars, people paying 35-40% over the asking price because they just need to get into a car, spending 15-20 or more above sticker to enter a car. And then what's crazy is that they'll put down three grand down or $5,000 down. They'll put down their stimulus money or the little bit of savings from unemployment. They'll put this money down and then they'll finance a car for 120% more than what it's worth, right? They're just financing the whole vehicle, taking on all that debt plus financing the additional price over sticker, and then their gas price just went from $2.85 or $3 a gallon to now $5.50 or $6 a gallon, right? All these cars, there's going to be millions and millions and millions of cars coming soon, desperately looking for a buyer because people aren't going to be able to simply make payments. They're not going to be able to fill the gas tank. They're not going to be able to pay the insurance on these cars. They're going to need to unload them. And so there's going to be a great opportunity for people to go out there, buy great work trucks, go out there, buy personal vehicles, family vehicles, sports cars, luxury SUVs, all these things when gas prices pick up more and fear really creeps in this market. We're not there yet. We're not there. We're approaching, but we're not just there yet. Friday numbers dented hopes that inflation may have peaked and adds to fears that the U.S. economy is nearing a recession. The inflation report comes from the Federal Reserve in the early stages of the rate hike campaign to slow growth and bring down prices. May report solidifies likelihood of multiple 50 basis point increases ahead. Obviously, nothing is good in this report, said Justin Breding, President M12 Partners, a global macroeconomic research. There's nothing in there that's going to give the Fed any cheer. I struggle to see how the Fed can back off. With 75 basis points of interest rate hikes already under its belt, markets widely expected the Fed to continue tightening policy through the year and possibly into 2023. The central bank's benchmark short-term borrowing rate is currently anchored at 0.75% and 1%, and expected to rise 2.75% to 3% by the end of the year, right? Inflation has been a political headache for the White House, administration officials, right? So there's just no way that they're going to be able to tame this thing. That's my belief. There's no way they're going to be able to tame this thing. And they said they're going to try to do a soft landing. I think Michael Burry nailed it when he said it's like watching a plane crash. That's what's going to happen. There's no way that they're going to be able to do a soft landing. You got 330 million Americans, most of which are living above their means and living on credit. And so when they're increasing rates and they're pulling back consumer spending and they're doing everything that they're doing, there's just no way. I believe we're stepping into a once-in-a-lifetime opportunity to invest. No doubt about it, once-in-a-lifetime opportunity to invest. This is going to be a time where really smart people shine. And this is going to be a time also where other people get exposed. People that, maybe were heavily leveraged or, they maybe got lucky in some stocks a couple years ago. Everyone did. But I think that we're going to start to see the truth about who's really prepared, who's smart, who's savvy, who's sophisticated, and who has a plan. Those people are going to do very well over the next couple years. What do you think about this entire situation? Drop your comments below. Hit the like button. Subscribe. Also subscribe to my second channel. If you need help with your credit, increasing your credit score, credit rehabilitation, if you want to get started on YouTube, get on the YouTube grind with me. Get started in real estate. Invest when the market crashes. Now's the time to start learning all these things. Join my private community. Bi-weekly phone calls with me, cashnow.video. Subscribe to my second channel. It's going to be a cool interactive show coming out this upcoming week. And LinkedIn, Twitter, Instagram, TikTok, everything's in the banner. And I'll catch you guys in the next video.